If you think it's too late to buy gold and you're using the CP lie, then buy silver. That's my answer.
Silver is so undervalued. So even just to get back to the CP lie, it would have to be $200 an ounce. We're so far below that, and then potentially as high as $2,000 an ounce, which is staggering. But this is what the numbers come out with.
Yes, yeah, and I believe that the $200 per ounce figure is a very attainable figure in a rush, and there is a rush that's coming. There are these rare moments in history where gold becomes not only the safe haven asset where it's insurance, but it also becomes the asset class with the single greatest gains in potential purchasing power. And we are in one of those right now, and this proves it. It isn't the West that's doing the buying, and even people in our sector are going, what is driving this? Well, there it is. Bam.
There you go. China, they're buying it all.
Hi, it's Mike and Alan again with the Gold Silver Show. Alan, how are you doing?
I'm great, Mike. Thanks. We're talking about gold and silver today, and I want to start with a tweet from David Bateman. He said, my $800 million investment in precious metals in the last year or so is now worth $1.2 billion. So a 50% increase, no leverage. More billionaires will be made, but only the unafraid. What do you think, Mike? He's up 50% in a year. That's pretty good.
But his closing statement is, but only the unafraid. And gold and so these are the safe haven investments with no counterparty risk. No counterparty risk.
It's true.
Right now, I've got a couple of friends that are, in our, they comment on economics and stuff. So they're in our genre of what we do. And they talk about how you can earn a return on your gold. This is a great return, but the return they're talking about, that this does introduce risk. And so they're talking about something that introduces a counterparty risk on your physical gold. And I see no reason for it when you've got this type of spectacular return. There's nothing else that has done this in that time period. This is huge. And to be able to, I said in my first book, and I think I said it in my second book, that there are these rare moments in history where gold becomes not only the safe haven asset where it's insurance, but it also becomes the asset class with the single greatest gains in potential purchasing power. And we are in one of those right now, and this proves it. I thank you, David Bateman, because you've proven my first book, which I wrote from 2004 to 2007, you've proven me right.
Absolutely. Thank you, David. And the follow-up question that so many people have is it too late to get into gold? Why or why not? And David Ingalls here says gold prices have topped the inflation-adjusted price set 45 years ago. So is it over, or is the bull run going to continue?
Depends on what inflation indicator you subscribe to. And it also depends on, you've got to take a look at what was happening in 1980. There were a lot of similarities geopolitically with wars and with, there tremendous amount of similarities, except debt to GDP back in 1980 was at about 30%, not 120 or whatever it is now. I can't remember the exact figure right now. Right now, we seem to be in some social unrest where the country seems to be falling apart. And then on top of that, we've got the potential of World War III, like always, just right around the corner. And then you take a look at the book we wrote, Great Gold and Silver Rush of the 21st Century. Back in 1980, it was 10% of the world's population that took the price of gold from $35 up to $873 intraday. And because at first it was just Western Europe and Canada. And then first day of 1975, the US got to join the party. First day of 76, Australia got to join the party. But it was illegal for most of the world's population. There were no markets where they could buy gold, no exchanges that affected the global price. So even if you lived in a place where it was legal, but everybody was poor, South America, Africa, those places, there's no exchanges. So you might be able to buy gold from another individual. In the USSR, all of those Eastern Bloc countries and Russia, it was illegal. It was illegal in China under Mao. It was illegal to invest in bullion. There, you could buy jewelry and coins in India, but there was restrictions on bullion back then. And so the most of the world was restricted from participating. And today it is only North Korea. And that means that, we did a study and we adjusted it for the population growth and everything else. And there are 18 times more people to buy that can legally buy and afford gold and silver. And on top of that, there is 55 times more currency, and there's only twice as much gold available. So, I mean, what does this add up to? Even if you, get rid of the 18 times more people, 55 times more currency, twice as much gold, that means there's 25 times the purchasing power coming at it this time. And we've probably got a far bigger crisis heading towards us because of all the energy that has built up from this phony baloney monetary system we've got that is immoral and should be illegal.
I agree completely. And you asked me before the presentation to include a different chart of inflation-adjusted gold. So previously I made this chart adjusting for the CPI. We're basically at that record peak, as we just saw in the previous slide. However, if you don't use the phony baloney government CPI numbers and instead use the original numbers that the government used, the peak in the gold price should be up around 33,000, 34,000 an ounce.
Yes. And so the question, is it too late? To me, you got to pick a number between these two sets of government numbers. This is not something John Williams of Shadow Stats Government Statistics came up with on his own. It's not lunatic conspiracy theory stuff. It's the old way the government used to calculate inflation, and their new manipulated way where they change every couple of years, they change something on the way that they calculate the CPI. And basically, it saves them a lot by screwing people out of Social Security entitlements and things like that. Anything that where the government is sending out a check that it gets inflation adjusted, the old CPI would cost the government a fortune. The new CPI, it costs the recipient a fortune. And so pick a number somewhere between $3,500 and 34,000, because we can round, and because this chart is a month old or so.
Exactly. Yeah. So the bull market in gold is not over yet. That's the takeaway there.
By no means. Now you take this information and put it together with what I just said about 18 times more people, 55 times more currency. China was not involved. China and Russia were not involved in the last bull market at all. It was illegal. And so this time is really different. Okay, and if you think it's too late to buy gold and you're using the CPI, then buy silver. That's my answer.
Silver is so undervalued. So even just to get back to the CPI, it would have to be $200 an ounce. We're so far below that, and then potentially as high as $2,000 an ounce, which is staggering. But this is what the numbers come out with.
Yes, yeah, and I believe that the $200 per ounce figure is a very attainable figure in a rush, and there is a rush that's coming. I think that we've got if most of the people that are watching this did watch my bubble video from a few weeks ago, look at the state of the U.S. economy. We are teetering on a knife's edge, and I do believe that whatever comes next is going to be one of the greatest crashes in history, and the only way that they can stop it is to print massive amounts, just, it's Bernankenomics. Bernanke changed everything. And the printing just means that gold will have an even higher price.
Yeah, exactly.
So, yeah.
So judging by inflation, the bull market is not over. And in a previous video, we actually speculated that the bull market would continue because of real interest rates, specifically negative real interest rates. And we talked about this chart here, Mike, where we showed that the two bull markets in gold, which are in red boxes, they correspond with the stalactites here, which are negative real interest rates. So that's the Fed funds rate minus the CPI.
Yeah.
So,
and I made some special requests from you.
Yes, you said, well, what if we adjusted this not by the CPI, but by the shadow stats CPI, which is probably more accurate. It's the government's old numbers. And so I did that. And that's basically the black line here. And you can see how deeply negative, like really, really deeply negative real interest rates are for decades.
Wow.
And the gray line here is the midpoint of the two. So it's halfway between the CPI and the shadow stat CPI. So halfway. So
I think it sort of makes sense too. When you think about the inflation that was happening once COVID lifted and all that currency from the stimulus checks that went out came out of hiding, that inflation that was there and people's real experience. How much more does it cost to go out to dinner? How much more does it cost to go shopping at the supermarket and so on? I sort of believe that gray line in the middle. Yeah, because the real interest rate that's in red, the real rate adjusted by the CPI, doesn't fit my experience in real life.
Yeah.
So,
yeah,
okay.
I think the gray line probably somewhere in the middle, but either way, we've got negative rates, negative real rates, no matter which metric you want to use. And I want to look at
before you move on, though,
Mhm.
do you see how the gray line in the 90s is hovering around zero? And then where the red box starts is where the gray line dips significantly below zero, right where the red box, that gray line corresponds to the bull market in gold perfectly. Wow. Okay. Now you can move on.
Exactly. So a logical follow-up question here is, well, what's going to happen with real interest rates? Are they going to stay negative or are they going to go positive? So to answer that question, I wanted to pull up the CME Fed Funds Futures tool and show you guys this table. So as we look to upcoming Fed meetings, October, December, and then a whole bunch in 2026, you can see in the blue boxes that we're moving to the left. We're moving to the left as we go down this table, which basically means that all the Fed funds futures traders who are actually betting, real money or real currency on where they think interest rates are going, they're all betting that the Federal Reserve is going to cut rates further and further and further and further over the next 12 or 18 months.
Wow.
So they think interest rates are going down. And that means real interest rates, of course, are going to go down. They're going to get even more negative. And so that means the bull market in gold is probably going to continue for at least another, 15, 18 months.
Okay. And, we did look at this just before we started this video. And one of the things that we, analyzing so that we could define this for everybody, because I hate tables. I love charts. I hate tables. But there's a column missing, a column of will they leave everything alone? All the way to the right, if there was another column there, that's if they're not going to do a rate cut. So 98% of the market is betting that there's a rate cut. And from then on, the rate cuts get deeper and deeper and deeper. Perhaps I'm pointing the wrong direction for the video. I don't know. But when you get down to next year, nobody is betting that they're going to cut like a quarter point or something. Everybody is betting on some pretty deep rate cuts coming up. So there's no bets going up. Every bet is going down. And wow, there's 250 to 275 basis points so that's 2.5%, right? To 2.75% is still at 19% of the survey is betting that they're going that low, 28% roughly, 2.75 to 3. And what's the current rate right now?
Right up here between 4.25 and 4.5, but they're probably going to cut it tomorrow.
Okay.
So yes, to your point, Mike, there should be a column. Ordinarily, there would be a column here, which is, people are betting that the Fed will leave rates unchanged. But that column's not there because there's not a single trader that's betting that rates will stay the same. And there's nobody that's betting that rates will go up at all in the next 15 months. So everyone's betting it's going to go down. It's just a question of how quickly does it go down? How far does it go down? This is so bullish for gold and silver.
In one of our last videos, you also presented a chart that I can't remember. I think it was from Tavi Costa. No, it wasn't Tavi Costa. But it showed that every time they do rate cuts, when there's a rate cut cycle, it's rocket fuel for gold. Gold just takes off. So, and gold is already taking off, and we haven't even started the cycle yet.
Exactly. Okay. Exactly. Things are looking good. And to add fuel to the fire, we've got movement in China that's basically sort of encouraging their citizens to buy more gold. So China proposes rule changes to ease gold imports and exports. So this is according to Bloomberg. China sought to ease licensing rules for gold imports and exports as the world's largest consumer of the precious metal continues to diversify its reserves away from US dollars. The country plans to expand the use of multi-use permits, a faster approval system, by increasing the number of ports that can accept them, according to a draft proposal from the PBOC. The central bank also plans to extend their validity to 9 months and remove limits on the number of times each permit can be used. So China wants more gold.
Yeah. And, it says imports and exports, but China doesn't export any gold. They keep it all. So they're the world's largest producer of gold, and they're the world's largest buyer, the importer of gold. And so this just allows them to import more easily. And so, we have one hell of a bull market coming.
Exactly.
Yeah.
And more news from China on the Shanghai Futures Exchange. These are gold inventories, and you can see they've absolutely exploded. This is like unfathomable. It almost feels like a typo, but it's not. And you could see that the amount of gold on the exchanges was pretty flat for about 7 years, started creeping up in the last year or so, and now it's exploding.
It's an amazing chart, but the commentary from Zero Hedge is actually even more amazing. China secretly buying up massive amounts of gold, 10 times more than officially reported, according to Goldman Sachs. But that's old. That's from the end of last year. And then Zero Hedge reposted that and said, not so secret anymore. And that's true. This is, what we've seen is this tremendous increase in price that corresponds with this chart. We've seen a price increase that where we have these bull markets where it isn't the West that's doing the buying. And even people in our sector are going, what is driving this? Well, there it is. Bam.
There you go. China, they're buying it all.
Yep.
Absolutely. Well, we have a viewer comment here from Baron6271. Mike, you helped me understand what physical gold and silver is all about. I bought 2 of your books. Thank you. This retail investor is still stacking like the bricks.
I thank you, Baron.
Thanks, Baron. And another one, Mark Holiday. Mike, your content kept me sane through the 2020 insanity. Many thanks and blessings to you and your family, an old 70s veteran.
Thank you very much. This really pleases me, and I want everybody out there to know Alan surprised me with this. I did not get to see these beforehand.
Mike didn't know these were coming, and we're not done yet. Right. Anthony says, I made so much effing money on gold and silver thanks to you, Mike.
What it took was faith, patience, and endurance.
Yeah, amen. Zach says, thanks, Mike. Now I see the value of my wealth in ounces, not dollars.
And a thumbs up to you as well, Zach.
Beautiful. Another one. Breadwinner Beezy. I'm a young investor, 24 years old. My whole portfolio has been based around Mike Maloney. I've been extremely profitable. Got H-bar at 5 cents and bought silver at $21 an ounce. Huge thanks, Mike.
That makes me feel really good, that especially starting somebody off. And, there's, I've got something on my desk here, my missions. My personal mission, maximum prosperity for all of mankind.
Amen. Well, as a reminder, Mike, when I found you roughly 10 years ago, I guess I would have been about 26. So similar to this guy, I got started early thanks to you. So thank you so much. A couple more. We're not done yet. Mike,
Okay.
Mike, I'm watching from Ireland. I started saving in gold and silver after your epic, true History of Money series. You have helped thousands of people, I'm certain.
Thank you. These are very touching, actually.
Couple more here. Mike, you're the reason I found out about the difference between money and currency. A massive thank you to you and the team at Gold Silver from Sweden. You're a trooper.
Thank you. These are just awesome.
And there's so many. I had to cut them down so we could fit them in the video. You are why I bought silver and woke up from the UK.
Awesome. And the UK is definitely having some problems now when it comes to freedom and everything else. So, yeah, yes. That's really nice to hear.
Nathan Hart, every high school student should be mandated 1 hour of your videos per week for an economics passing grade. And someone said, that would absolutely destroy the economy. The U.S. economy depends on the citizens' ignorance.
And it does. It's a shame. It does.
Yeah. And our final one here. You have made much more than a small difference, Mike. And on behalf of all your viewers and YouTube followers, thank you. Thank you, Mike.
Right. Well, thank you, Alan. We've never done this before, but I want to have Dan edit something in at the end, and it's about the entire economy. It's a meme. The entire economy relies on grown-ups pretending our currency is real. So I want to thank everybody for watching, and thank you, Alan. Great presentation, and thank you for this surprise at the end.
Yep. Thanks, Mike. Thanks, everyone. Invest and earn up to $2,000 in bonus silver at goldsilver.com. It's easy. Step 1. Open any gold silver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit goldsilver.com/free silver to claim your silver.